Welcome back. You're watching The Portfolio Manager, and with me is Anirudh Garg, who is the partner and fund manager at INVasset PMS. Anirudh, I want to talk to you about some of the other portfolios or the sectors allocations that you have. Specialty chemicals. This was a darling of this of the market couple of quarters back, and now we are seeing some kind of pressure happening. Fundamentally, there is a pressure in that sector.
Mm-hmm. Yeah, okay. So specialty chemicals is a very interesting space. Specialty chemicals, I'll tell you about how it happens in the market, how exuberances are created. At the very top, I was amazed when specialty chemicals was given a status of FMCGs. They were being compared to FMCGs when the multiple got so high. So what is a chemical company? A chemical, maybe less in terms of specialty chemicals, but broadly, what is a chemical company? A chemical company is a commodity. When you're buying a chemical, it does not matter what company or what brand you're going to buy. You're not going to consume it, or it's not your lifestyle product. So it was very, very clear that all the capacity additions that was happening since 2013. 2013 is when China said that, okay, we are now developed and we do not want to produce chemicals and pollute our environment. India filled up that vacuum. The checks were not that great here. And the chemical companies built a lot of capacities, especially in the last 3-4 years. And the 2020 run, the run post 2020 made sure that they reached a valuation where they were compared to FMCG. So they picked up something from the very bottom, made it exuberant. And yes, now everybody was interested in these chemical companies, which were now bound to take a rest. So we believe that both time and price corrections were evidently due in specialty chemical companies. And another couple of years, the price corrections will happen. The weak hands would exit. There'll be price correction in the product as well, and whosoever is the fittest would survive, and then the run would resume again. But yes, for the next couple of years, we are not very bullish on the specialty chemicals on the chemical side, until and unless they are producing something which is very, very different, or some extraordinary innovation happens.
Have this group of companies underperformed the portfolio?
We have not been holding, I think, barring one, we have been not been holding chemicals as such in our portfolio.
Give me a sense of what defense is going to do, because it has also had a good play in the last 12 to 18 months. We've seen most of the companies doubling in valuation. You have a couple of them in your portfolio in the shipyard space, especially. How do you see the defense playing out? And you're more inclined towards the public sector as compared to a private sector where the opportunities could be there.
Okay, so defense, when we look at defense, it's a very big story that is unfolding for India. See, firstly, look at the demography of India. We are surrounded by very hostile neighbors. Huh? Secondly, we have been importing defense from the very long. I think since independence, we have been dependent on foreign people for defense only, be it Russia, the US, Germany, France recently. But when a country is surrounded by so many hostile neighbors and catering to more than 150 crore people, it's like how we joke at INVasset is that we can order one biryani from outside occasionally, but the dal roti has to be from inside the house. So the defense there had to be this decision that has to come, where you had to make sure that your defense production is done indigenously at your home. That is what is happening in India right now. This Modi government is not planning for the next 2-3 years, it's planning for the next 15 years. And when you are planning for the next 15 years, a very important vertical like defense has to be in-house. So we believe that what has happened in defense and railways is a very, very significant shift. Why these stocks are looking expensive to us, and why we talk about them a lot, that they've become expensive. A lot of my investors, they say, as you asked, that they have crossed doubled in value or tripled in value or become 4 times in value. The point is that PE expansion phase that any sector which was neglected goes through, that initial PE expansion phase is something that makes everybody uncomfortable because of the initial rise. But look at all those 10 years where they had not performed at all and others were. And now they have tailwinds with them and their thing was due. And the markets, what they did, they just in the last couple of years priced in what was due to happen in the last 10 years. So yes, I think the defense is altogether a different sector under the current regime, and all these PSU, technology transfers that happen in defense are more comfortable when it comes to PSUs. So yes, PSU defense companies are looking very good to us. It'll be very soon when they'll become the darlings of I would say, the stock market, and not considered those. They started there when we bought Masdor Docs and GRSE and all. They were considered small caps. Now they are considered. Then they became mid caps, and now they're transitioning from mid to large caps. Yeah, they are very solid companies and poised for a great growth in the next 20 years.
How do you look at electrical utilities? And I don't see renewables as part of your portfolio. So is it part of electric utilities that you have?
No, so renewables, we are holding renewables. We have something like SJV, and I think we bought it at a way. So first of all, I would like to mention here, Sujit, is that last 1.5 year almost. So November 2022, that is 1 year back, November 2022, that was the time when we did any type of churn in our portfolio. We have been holding the same stock since then, and all this return that you see are on a particular set of stocks. No churning has happened in between. So maybe 2-3% of churning has happened, not much. So yes, after that, when you're talking about renewables, yeah, we are invested in companies like Inox Wind. And a disclaimer here that any companies that we talk about, any sectors that we talk about, we have vested interest. Please consult your financial advisors before taking any decisions, and are not a recommendation to buy and sell. Yeah. So we have Inox Wind, we have Suzlon, we have SJVN, which has been a great compounder for us. Yeah. So we are very bullish and gung-ho on the renewable sector.
Mm-hmm. Interestingly, you have airlines as well in the sector, and there are very limited number of airlines which is there. So I assume that you have the leader of the sector, which is part of your portfolio.
Mm-hmm. So I'll tell you, it's not airlines. Sometimes what happens is that when you share a portfolio fact sheet or things like that, the sectors are sometimes by the custodians or the fund manager, these accounting, like for us is Nuvama. We hold HAL in our portfolio.
Okay.
We are very.
So why isn't part of defense and it's part of airline?
The old classifications that the fund management accounting people do, sometimes they've not changed, so that's why.
Okay, so again, you have 1% of your portfolio or assets in HAL, and I assume that it's again the tailwind which is pushing that stock which is there, right?
Absolutely. I think that is the strongest bet. Anybody who wants to have an exposure or wants to study the defense sector should surely study HAL.
Mm-hmm. You said that you haven't done much of a churn of your portfolio in the last 2 years. Where is the new money being invested? Are you reinvesting into the existing companies that are there in your portfolio, or is it you are churning and you may be adding a company or two every year?
Okay, so what happens is that in an old economy run, as I mentioned earlier, there are two type of themes, if I take the liberty of saying so, that play out. The one is a interest rate sensitive theme. For an interest rate sensitive theme to play out, you need to have the global growth in place and the global inflation also under control. Both these things were not there. If you talk 1.5 year back, both these things are problem. The global growth owing to factors like say the post-COVID problems that were there, and then China not opening up, and then the Russia-Ukraine war, and the US-China tensions that were there, and the supply chain disruptions that were there. The global growth was not that much present. And then the US Fed said, and 2021 that, okay, there is an inflation problem. So the interest rate sensitives, they went out of the bag. So when we invested in November 2022, it was very, very clear to us that, okay, CAPEX is the only theme right now. You just need to find the leaders in what CAPEX and related ancillaries and related things can do. Now, with the passage of time, what has happened is that out of those two weak legs, the lower one, which was the inflation, is now seeming to come under control, as the US Fed has now acknowledged that, okay, the inflation is not a problem anymore. Though we would like to watch it, but not a problem anymore. We believe that once the US Fed has said that, historically, over the past 30-40 years from what we have analyzed, is that when it says that there is no problem anymore, inflation is over then. Yeah, the rate cut can come in March or it come in June. That is just a event that is supposed to fold out. But otherwise, everything seems under control. So companies which are focused on Indian demand, not global demand, but affected by inflation, those companies join the thing. So if somebody comes to us today, we would add sectors like real estate and autos going forward.
What makes you bullish on real estate?
See, Indian real estate, the demand is there. You see, any project DLF launches or Sobha has launched or these other developers have launched, they are sold out within a day. And then when the inflation seems to come under control, then you're expecting a fall in interest rates. So yes, this would give an additional boost to the real estate sector. And since also on the other hand, since the global growth is not there, so all those metal companies which particularly are for the input cost to real estate, they are also not moving significantly higher. They are very much under control. And now you have the demand, you have the profit margins, and the customer can come in because of lower interest rates. So real estate seems good to us. Yes,
and you see a good run happening in real estate. Do you have a sizable exposure to that sector?
Yes, the current portfolios that we are doing and the next shift that is due in our portfolio, yes, we are bullish on the real estate sector.
And what kind of run up do you see in the real estate sector? Means what should be the exposure like in this sector from a point of view of whether either you're looking at commercial real estate or you're looking affordable or you're looking at luxury in that space?
So we are most bullish on the luxury real estate part. That premiumization concept or the premiumization in lifestyle that has happened post COVID. Everybody of us knows that the luxury items is sell out first. You go in a theater, the recliners, they are sold out first than the normal seats. Yeah, so that premiumization that is occurring. It's not only in real estate; it's occurring everywhere. Be it alcohol, be it airlines, or be it cars, or be it clothing, be it shoes. Everywhere, the lifestyle. Everywhere the premiumization thing is taking the forefront, and that is happening in real estate as well. And then after that, we are more bullish on commercial because the commercial is also getting back. We've been in talks with a lot of real estate developers and all those real estate managing companies that are out there. Yeah, the most bullish trend is currently seen in the luxury part of the sector. And you were asking about what returns we are expecting. We are expecting above average returns. So yeah, currently the markets, they're moving in a little bit of expensive zone. But yeah, for the real estate sector, we still believe that at least a 24% CAGR for the next 3 years should come.
Anirudh, it was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit.
It was a pleasure indeed. Thank you so much.
You were watching the portfolio manager, and that was Anirudh Garg, partner and fund manager at INVasset PMS. Thank you for joining us on NDTV Profit.